This video is brought to you by SoundMoneyCampaign.com. Be part of the solution. Visit SoundMoneyCampaign.com today. Hey everyone, this is Elijah Johnson with FinanceandLiberty.com, and back with us today is David Morgan, a precious metal aficionado armed with degrees in finance and economics, as well as engineering. He created Silver-Investor.com and originated the Morgan Report, a monthly that covers economic news, overall financial health of the global economy, currency problems, and the key reasons for investing in precious metals. David, thank you so much for joining us today on FinanceandLiberty.com.
Thank you very much.
All right, so last week the Federal Reserve announced that they will not taper and that they will continue quantitative easing, printing $85 billion each month. What was your reaction on how precious metals reacted from this?
Well, on that given day, I was quite, I wouldn't say overly excited. I've been in this market too long, but I was pretty excited that silver made a 6% move up, and gold, I think, was about 4.5%. So obviously the metals seemed to react to the no taper statement. But just a couple of days later, they basically gave up all the gains they had made on that day. So obviously it didn't mean a whole lot in the short term.
Correct me if I'm wrong about this, but in the fall, precious metals usually rise. Do you see that happening this fall?
I do, and the seasonalities for gold and silver have not worked particularly well the last few years. Normally, you get summer. August is usually the low. We saw the low in silver in late June, and we saw a fairly decent August, actually. In fact, in August, silver outperformed all other commodities for that month. So it didn't hold this year. And usually you see a pretty good move into the winter months as well. Winter doesn't start until the end of December, but through the fall, you see December be a pretty good month. And the last 2 years, you've seen this big, hard sell-off into the last trading day of every year. And it's easy to do that. It's easy to move the market either direction, up or down, because the trading gets very thin, meaning there's less and less participants as we get closer and closer to the holiday season. So the last couple of years have been very discouraging for metals bulls going into the end of the year, and I expect that's probably going to be the same thing this year.
Right, and I know that the Dow from the Federal Reserve's announcement actually hit a new high. It might have been on the day or shortly afterwards. What is your perspective on this? The market seems to just keep going higher.
Well, I think there's a lot of excess money in the banking system. I mean, the $85 billion that's being borrowed every month. And basically the Federal Reserve is buying U.S. bonds that most sovereign nation states don't really care to participate in as strongly as they once did. In other words, China, Japan are not buying the quantity of U.S. debt that they were. They've backed out of that. And but this money is going into the banking system to reliquify the banks, and they're putting that money to work either at interest, which is primarily what they're doing, and some of that, of course, is spilling over the stock market. And of course, there's more money chasing, a fixed amount of stocks, and therefore you're going to get a rise in stock prices. I don't think it's something that's based on, fundamentals, that the stock market or some of these stocks are particularly strong and selling at big discounts and that type of thing. It's basically based on an increase in the money supply.
I recently interviewed Jason Burak from WallStreetForMainStreet.com, and we discussed how one of the main goals of quantitative easing was to stimulate the job market, but we haven't seen that actually happening. The job market doesn't really seem to be improving. So why do you think the Federal Reserve just continues trying something that has proven not to work?
Well, I know Jason, and he's interviewed me, and I've interviewed him. But I disagree. I think it's Fed speak. In other words, the politically correct thing to say is that we're going to keep continuing to buy bonds and mortgages at the rate of $85 billion per month until we get the unemployment rate to 6.5% and inflation at a steady 2%. And that sounds good for the public consumption. But the truth of the matter is that the reason that they're doing what they're doing is to keep the banking system intact. The too big to fails. In other words, it's all about keeping their everybody's in the banking system. I mean, remember, the Federal Reserve is the all-powerful, all-seeing, all-knowing banking elite structure. The only thing higher than that is probably the BIS. And so they're basically, their whole edict is to stay in power and to keep their power structure in place, which means to keep the banks happy. But it sounds good on TV to say that you're so concerned about the unemployment, you're so concerned about inflation coming up and all this. And the public buys it. But the reality is, in my very studied opinion, is it's all about the banking system. It's really not about helping the unemployment picture or helping to sustain prices or get some good, quote unquote, good inflation into the marketplace.
So do you see the Fed's quantitative easing actually hurting people who are not in the banking sector?
Yes. I mean, watering a milk never works. I mean, how would you feel if you went to the grocery store and every time that you went there and purchased a gallon of milk, it was watered down more and more and more? It would have less nutrition and less food value every time you went. So you can say the same thing about the money supply. I mean, really, when you water the money supply like they're doing, and it hurts everybody, especially those that are poor, that are on fixed incomes, that need a rate of return on their savings. I mean, this is what it's doing. It's certainly not helping anybody. But of course, again, to repeat myself maybe one too many times, it's the rhetoric sounds great. Oh, yeah, we're looking after the unemployment. There's too much unemployment. We're going to help everybody out. Well, they're not. They're not. If they wanted to help everybody out, they do what their mandate was, to have a stable monetary system. $1 in 1913 would be the same dollar today. Well, it's not. It's worth about 3.5 cents. So obviously they haven't fulfilled their mandate.
Exactly. And we were just talking before the interview about the CFTC and getting back to the silver market. The CFTC just made an announcement today, and to quote them, they said, "Based upon the law and evidence as they exist at this time, there is not enough viable basis to bring an enforcement action with respect to any firm or its employees related to our investigation of the silver market." What is your perspective on what the CFTC has said?
Well, my perspective is, one, I'm not surprised. Secondly, what you just read, I just go over it slightly, based upon the law and evidence as it exists at this time. They left the door open slightly. I mean, there was something published later on in the day that talked about position limits, and that possibility still exists, that the CFTC may come up with a ruling later on that says position limits are such and such. I find that to be somewhat ludicrous from the aspect that there already are position limits, and the CFTC's basically turned their heads the other direction and have not acknowledged that some of these trading entities have exceeded the position limits. But nonetheless, reading it verbatim, it might suggest, and I say might suggest, that there could be a ruling later on that the CFTC says we're not going to limit energy futures trading, but we are going to limit silver trading to such and such an amount. And if that were the case, then what you would find is that that sentence you just read has some teeth, perhaps, or a weak bite, meaning that the evidence at a later date says, oh, well, such and such exceeded the position limits, therefore they're in violation. But again, this thing has been looked at for so long, and every time the official notification is that they don't find any wrongdoing, or at least not enough that could legally take the case to the level that's required to put it, into a courtroom. So I am, again, not surprised. I think if you go back, GATA put out something later in the day that talked about that GATA's lawyers had noted that the government's market rigging authority came soon after the organization of the Gold Reserve Act of 1934, and they give the URL for that. The act as amended since 1934 says, quote, consistent with the obligations of the government and the International Monetary Fund on orderly exchange arrangements and an orderly system of exchange rates, comma, the secretary, ... and then it goes on, with the approval of the president may deal in gold, comma, foreign exchange, comma, and other instruments of credit and securities, end quote. So from 1934 onward, and GATA has the proof, the government has had the ability to go in and make orderly arrangements. Well, what that means is they can manipulate the market from time to time as they see fit. So anyone that stands up and says that they don't do it doesn't really take the time to understand what's really going on or what's in black and white for them to read at law. And then it goes on to say the authority plainly covers everything financial on the planet and is essentially a declaration of economic war on every other country. Now, that's Gatto's words, not mine, but I agree partially at least that it plainly gives them the authority to go in and do whatever they want to do whenever they want to do it. Gold, silver, whatever the financial instrument is. So the idea that the CFTC can really do something about this is it's almost it's frustrating, but it's also, if you look at it from a broader perspective, something that's almost a waste of time. Because if you really expect one government agency that's much smaller than the other one, and one that has basically all the power, which is the money, the printing press, to really do anything of substance, I think you're a bit delusional, because the facts, as they have stood for a very long time, show that the best interests of the elites are what is being protected, not the people at large, not the citizenry. And it's been that way for far too long.
So you see that some firms are participating in illegal, or they have higher positions than they should in the silver market right now?
Yeah, I'd be careful not to use the word illegal. The reason being is that the commercials are treated differently than the speculative category. If you're a commercial category, then you don't have to put up as much margin, and you're given kind of a broader spectrum because the commercial, by definition, is someone that deals in the commodity itself. Therefore, they have more knowledge, and so it gets to be a little bit of a gray area. And I don't, pretend to be an expert in CFTC law. What I can tell you is that once you're in the commercial category, the tendency, and this is from empirical evidence, all you have to do is look at what silver trading has done over the last few years, or the last 10 or the last 20, or from the Hunt brothers onward, to see fairly clearly that the bias is toward the short positions. It's not toward the long positions. The only manipulation case that ever has any teeth seems to be manipulation from the long side. But common sense tells you if you can manipulate a market up, you can manipulate a market down. I mean, that's take a great deal of intellectual power to understand that. The problem is that these commercials are given more of a broad brush as far as what they can do. And this, of course, goes back to what we're talking about a moment ago, that under the edict of the all-powerful, all-knowing, all-being Federal Reserve System that can go in, and the Working Group on Financial Markets that can go in and basically participate in any market in a way that they see fit, can do whatever they want to do. So can the CFTC go in and say, no, you can't, when at law this thing has already been passed that they can do whatever they see fit? No. So again, I think it's a bit of almost a sideshow. Not that it isn't important, not that it doesn't affect people, not that it doesn't hurt people. I'm not trying to be anything but big-hearted about this, but I'm also a realist. And that's why I haven't taken a great deal of my time to pound the table again and again and again on this issue, because from my perspective, way back in the beginning when the issue rose about silver leasing and gold leasing, even though important, I felt that the authorities, the powers that be, would basically let it slide, let it go, not do anything about it. And of course, as of today, that's still the case.
So what specific firms do you see are manipulating the silver market? I know we've talked about JP Morgan manipulating the silver market. Are they continuing to manipulate it? And are there any other firms that are also?
Well, I think Ted Butler, to give Ted a lot of credit. I mean, Ted has certainly specialized in this area much more than I have, and has pretty much led the charge on this whole thing. And of course, Gatto as well. And there's others. And there, you can go to the bank participation reports and discover, what banks hold what positions. I mean, basically, they're the big money center banks. You've got Deutsche Bank, you've got HSBC, you've got JP Morgan. There's a few others in there. But again, does it matter? yes, it matters because it can, it puts a lid on the market from time to time. But I just want to repeat what I've said over and over again. You cannot manipulate the main trend. The main trend has been up. Look at the chart. Look at what's happened from 2003 till present in the silver market, or 2000 till present in the gold market. They're both much higher. It does not negate the fact that from 2011 May till present time, silver has basically gone from a high of 48 down to the 22 level, and it's been in a long, pretty much downtrend within, I think, a secular bull market. And the same thing with gold from about September of that year. But this is normal or abnormal market activity. I would consider it to be somewhat normal, meaning that certainly it's been clobbered down at certain times, but nonetheless, there's enough physical participation by people in general, particularly Asian communities, that are buying physical metal, that this can't go on forever. And I know people get tired of hearing that, but nonetheless, it's true. Paper doesn't equal physical, and it never will. And so the day of reckoning is ahead. It will take place, in my view. And I don't think we're that far away from it, meaning probably within the next 2 to 3 years. I don't see a big surge up in the metals in 2014. I see more consolidation and an upward bias. Same thing for probably half of 2015 or so. But at some point, this thing will catch fire. And there's already been a default. I mean, really, when Germany asked for its gold back and the New York Fed said, yeah, fine, 7 years. I mean, come on. This is a default any way you slice it. Yet, it kind of gets glossed over, brushed aside by the mainstream financial press. But nonetheless, it's a fact. And the fact remains that if all that gold was there and available, Germany would have it back in a very short order, but they don't.
Exactly. I mean, you and I have talked about this before, but even though silver has gone down for pretty much the past 2 years, the fundamentals are still strong.
Well, they are. I mean, there's more uses for silver. There's more, I think there's a lot of discouraged bulls, and I think there's certainly silver that's been sold back in the market. I won't deny that. But nonetheless, the reasons for owning silver fundamentally have never been better. And I don't think that is going away. In fact, I think it continues to get stronger. And I do think that as things grind forward, in time, there'll be more and more participation. Maybe some of that silver will change hands from weak hands to strong hands. And the other thing we should point out is that the overall commitment of traders, which is something that a lot of people focus on, basically has the commercial interests at a level that I have not seen in about 20 years or so, which, a couple of decades is a long time. That the insiders, you might say, the banks that we were discussing a moment ago, are not nearly as short as they once were in the silver market. They pretty much pushed off their positions onto the trading funds. And the trading funds historically are on the wrong side of the market. So, we just have to wait and see. I mean, again, I know a lot of people are worn out. They're just very discouraged, and I take that to heart. But nonetheless, fundamentally, one, things haven't changed, but only gotten stronger. And two, when the shift has taken place that hasn't taken place for a couple of decades, you really ought to pay attention, because this is a forebearer of something in the future, in my view, meaning that the commercials are basically not short the market like they have maintained for a very long time. Why? Why is that?
Right, and I wanted to move our focus now to the debt ceiling issue. Treasury Secretary Jack Lew says that if the debt ceiling isn't raised by mid-October, the U.S. will have to default on some of its obligations. So do you see the debt ceiling being raised, or do you see us having to default?
I see it being raised. I mean, when the Gramm-Rudman bill was passed and there was going to be a limit, there was, some fiscal conservatives were very happy. Wow, we're finally getting a handle on this thing. And it's just been a joke. I mean, it's been overruled time and time and time again. I think it will be one again and again and again and again. And of course, sooner or later, people wake up to this, and people are kind of the last, meaning the common, the public. Whereas, China, Russia, India, Brazil, South Africa, all the BRICS, Japan, they've already woken up to this fact. They're making agreements and have made agreements amongst themselves to basically bypass the U.S. dollar in their in their trading relationships. So they already know what's coming. And dollar status is waning. It's going down, not up. Its ability to maintain its reserve currency status is becoming weaker and weaker and weaker. It's probably going to be an event or something that could occur quickly. I'm not predicting it will occur quickly, but it could, that all of a sudden people, the common people, you might say, people that really don't pay attention to what's going on in the financial markets, all of a sudden get a big wake-up call that the dollar is all of a sudden worth a lot less one day than it was, a few days earlier. Will that happen? I don't know. It's certainly been a kind of a slow grind up until this point. But the facts remain that on and on and on we go, more and more large nation states are opting out of the dollar, the U.S. dollar.
Yeah, I recently heard that Japan and China are actually now net sellers of treasuries.
That's right. I mean, the Federal Reserve is the backstop when no one wants this stuff anymore. And obviously, very few people really want any more dollar exposure than they have. I should say people when these nation states don't. Then somebody's got to buy them. And who buys them? Well, the Federal Reserve buys them.
I know a lot of people before were thinking, when China says we're not going to buy any more treasuries, that would pretty much be the end game. So hasn't China basically done that? They're now selling the treasuries. Are we at the end game?
Yeah, we've been at the end game. I think we started the end game in probably 2007, manifested in 2008 with the financial crisis that everyone could see, and it's continued. But the idea is that people have this preconditioned idea that the end game means that their ATM machine doesn't work, or that they go to a grocery store and there's nothing on the shelves, or whatever their preconceived idea of what the end means to them. But if we are really in it, but you can't see it, then what does that mean? From my perspective, it's been grinding sideways to lower continually. All of this stimulus, this monetary stimulus that the Federal Reserve has done with QE1, QE2, and QE3 has helped the banking system, but not the general economy. Sure, there's pockets here and there probably, but the overall man on the street has not benefited by it, only the banks. So it's still basically going down, not up. The value of the dollar is going down, not up. And the amount of entities that want the dollar is less, not more. So it is taking place. It's not scripted the way that people, quote unquote, believe it has to take place for them to understand that we are in a crisis, that we are in a currency war, that we are losing value and that type of thing. So it just depends on your perspective. But if you have an objective perspective and you just look at what is rather than the way you have to manifest for you to believe that it exists, it does exist.
And turning our focus back to the debt limit, House representatives say that in exchange for raising the debt limit, they would demand a 1-year delay in the implementation of Obamacare. Do you see this happening, and will that affect the economy at all?
I don't know is my answer. If it were to delay Obamacare, I think that's great. The idea that you can get something for nothing is something that I don't understand why people don't get the fact that that doesn't exist. There is no such thing as a free lunch. The idea to take care of your citizenry health-wise sounds very noble, and other countries have done it. But it really is back to what really works. And what works is individual responsibility. It's not the government's responsibility for you to take care of yourself. It's your responsibility to take care of yourself. And this is something that is a lesson that will be learned regardless of whether Obamacare passes or not. This is something that goes to a much more basic level. It's something that I discuss on the big picture, which means looking globally at the whole life scenario. The whole thing has been corrupted. The whole thing meaning there's air pollution, the air system's been polluted, the water system's been polluted, the food chain's been polluted, the monetary system's been polluted, the political system has been polluted. There isn't very much pure left. And because of those facts, no matter how far down you want to dice it into GMO foods or additives to the water supply or the way it's not filtered or whatever, I don't really want to get into the minutia. What I want to point out is that the whole system is corrupt. Not only the air, the food chain, the political system, etc. So what does it come down to? You as an individual cannot expect anyone else to run your life. You have to run your own life, and that means individual strength. And that's how this country was founded. It's a rule of law, not a rule of men. No man is above a citizen. And when the country was founded, the highest thing you could possibly be was citizen. The president was below citizen. Remember, all those people are quote unquote public servants. They work for the citizenry. Of course, that's been flipped around for a very long time. I'm not so naive to believe that exists. But nonetheless, when people understood the foundations of what the law meant and whose role was what, where, and why, we had a much stronger population. And guess what? They took self-responsibility because that's how it was set up. It was set up that the individual had responsibility. And responsibilities were actually very commonly understood. One, do everything you say you're going to do. In other words, don't lie, tell the truth, and if you say you're going to do something, you do it. And the second one was not to infringe on the rights of anybody else. I mean, really that basic, but we've come so far from that. And I think we'll get back to it. I really think that this system is going to be purged one way or another, either from a financial crisis or a political upheaval, or who knows. And I'm not wishing for this stuff. And all it is a cycle repeating. It's not like we're in a unique position that's never happened before. This is history repeating again and again and again.
Well, we'll have to leave it with that. David Morgan from silver-investor.com and themorganreport.com. Thank you so much for joining us today on financeandliberty.com.
Thank you for the time.
Go to financeandliberty.com and subscribe for free for more interviews and financial insight.